So I did a video on Coke about a week ago. Not on cocaine, but about the company Coca-Cola. And now we're going to do one on Pepsi. I have fairly similar thoughts about both companies. I think both of them are good as either value investments or as dividend portfolio investments. There's actually many different ways you can set up a dividend portfolio. However, two different types are ones that make sense in my mind, right? One is maybe seeking a higher yield and just trying to get a solid yield out of it, maybe 5, 6, 7%, right? And then the other is trying to get more around that 3 to 4% yield, but also either at least beating inflation or matching inflation, but hopefully beating it as well. So your portfolio can also grow over time while still having that dividend yield with it. And Pepsi and Coke, but Pepsi for this video, I think fits really well in that first portfolio. We can see it's gone up 28% over the last 5 years, and it's actually kind of good right now that we're almost 5 years out from COVID. So now we're basically getting the look at right before COVID. So we almost get a really nice, clear picture of certainly post-COVID, but we can also check the 5 years before then too. And actually, Pepsi's done pretty well. I mean, it's over doubled, almost exactly doubled since 2014 over the last 10 years, which isn't outstanding, right? That is significantly below the S&P 500. However, most of you are probably not just buying companies like Pepsi, just value investments. Maybe you are. If that's how you invest, that's fine. You're going to make a lot of money. Maybe not as much as if you're in tech or anything like that, but there's nothing inherently wrong with it. However, I'm assuming most people like me, I want companies like this more as one is diversification, but also as hedge, right? I love tech companies. I cover a bunch of tech companies on the stock. Tech has dominated the S&P 500 over the last at least decade, probably more like 15 to 20 years, right? But there's still room in our portfolios and room for holding stocks that aren't just going to, you're hoping just 4X like an NVIDIA or, obviously NVIDIA went more than that, but you're never going to 4X in 1 year with a Pepsi. You could with a lot of different tech companies if things just go perfect, right? Even if things go perfect for Pepsi, they're not going to 3X in a year. It's just not going to happen. However, that doesn't mean it's a bad stock. That doesn't mean that it's a bad company. There is definitely room for it. I think I mentioned earlier with diversification, right? Diversification is key to any portfolio. For example, right, I love tech. I have a lot of tech stocks. I'm primarily in tech. However, I had utility and REITs. So over the last 3 to 4 months, REITs have actually done very, very well. Utility companies have done very, 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 very well. With the expectation that rates are dropping, and they have a little bit, those stocks have done very well. And I've been able to take some of that money out and put it into some tech stocks I like. You don't necessarily have to do it. Maybe it's just, if things go horrible, you want a stock that you'd be able to sell. And, if the worst came to worst, right? You and maybe a spouse lost a job and you've ran through your entire, savings, whatever it may be. You never want to count on stocks to do that, right? But you never know. So one is diversification. Something like Pepsi is going to maintain value. We see a lot of tech stocks hit highs in 2021, right? Remember that? You can see it in so many. And then in 2022 and 2023, they were down, ran sideways, and then have ran up in the last year or so. Pepsi hasn't done that. It wasn't really hitting highs in 2021. Barely, right? And it ran up over 2022 and 2023. So maybe that was a stock you're like, okay, I've done very well in Pepsi. I'll move some Pepsi from here into tech, whatever it may be. You don't have to do it. But also, as a dividend, right? This is going to, certainly has over the last, I know inflation's been rough, but it hasn't been anywhere near. You could probably pick almost any time, any point on this chart, and you would have significantly, even if you timed it the worst, like right at its highs in 2007, you would still be easily beating inflation and then some. I mean, it's, 3X since then? 2014, exactly 10 years ago, you would be up double, which is well more than inflation. Even about 5 years ago, I think inflation's up about 23% since 2020. You could probably check it out right now. Inflation calculator. Maybe I should have not done this, but whatever. My internet's being very slow, so that's my only risk for if we bought in, 2019 for $1. Yeah, 23%. So you would have still outperformed inflation, even during one of the highest inflationary periods in U.S. history, right? Certainly over the last 40, 50 years. So Pepsi is done well. It pays over a 3% dividend, right? And you expect that if it was to drop, their earnings are probably doing fine, right? People are still going to be drinking soda in 10 to 20 years. That's not going away. So not a whole lot of risk there. Take a look at forward PE. Yeah, PE 25, forward PE 21. So this is a stock that is under S&P 500 average PE, although it's only off by a little bit, as I believe the average S&P 500 price is around 26, 27. Forward PE is lower, so you're looking at better earnings. And the one good thing about Pepsi and Coke and all those brands is usually when other drink brands come up, they just buy them because they have way more money than anyone else. I mean, these are ginormous companies. Market cap $240 billion. They have lots of cash, all that sort of thing. So they oftentimes just buy up all the drinks. There's a few other competitors, right? Like, I mean, Monster and I think Dr. Pepper is separate, right? There's a few, but really there's not a lot of competition outside of these two. Yeah, like I said, 3% dividend. I wide moat. Like I said, I'd agree. I think probably brand awareness, right? What do you think of when you think of pop? You probably think of Coke or Pepsi. And if you're thinking of other pops, you're probably naming another maybe 10 to 12. Likely half of those are owned by Coke or Pepsi, right? They have all the other brands encompassed within, Coke and Pepsi. It's not just those two. I'm sure most of you know that, but just in case, that's why we're covering it. Name brand awareness, huge thing, right? Also, like I said, money, $240 billion market cap. They have money, and if someone else comes up and starts doing something, with the rare exception of, like I said, Monster or something like that, or even, and I know they aren't exactly pop, right? That's an energy drink, but I'm thinking maybe something like, what's the Paul Brothers one, the Paul KSI, what is that? Y'all know what I'm thinking about. I'm actually really upset I can't think of the name of that. But just another drink that comes up that's just independent, just driven by the person who sells it, right? That's rare, but there's really not a whole lot of risk with these companies. There's some minor risk when it comes to, I was discussing it with someone and they said they were worried that with Ozempic and all that, people are going to spend a lot less money on food and stuff like that. But I don't think it's going to impact things that much, right? I think these brands are positioned enough to where they can diversify, right? They can go with the flow. Like, yeah, maybe it cuts down profits a little bit, but we're talking about, pennies on the dollar, right? These companies are going to do fine. If food, drink trends pivot, they'll pivot with it, right? I'm not particularly worried at all. So let's take a look at a few more analysts. Here's your ESG score, things like that. Hold, avoid, hold. I believe, I'm not sure what Market Edge is. I know a few of them are like, I know Schwab has at least one technical analysis one, right? So you always got to be careful because I'm talking about a long-term investment strategy, right? So more than half of analysts, 12 out of 22 are saying buy. The other half are saying hold. It's a little bit up from 50% the last 2 to 3 months that we're saying. So no one's saying sell. Like I said, this is a good company. You're going to do fine on it. You're going to make your money. Is it going to go up as much as some of the Mag 7 or tech stocks? Probably not, but I'm assuming most of you have some of those stocks. And if you don't, and you're watching a stock video on Pepsi, you probably don't care about owning any of those. So I think I already summarized most of my thoughts in this video. I'm not going to repeat myself. If you have any questions, go ahead and leave me down in the comment section. If you did watch this video and you enjoyed it, I really would appreciate if you left a like or subscribe. I'm a new channel, just starting to get this thing jump started. And I notice that in almost all of my videos, when someone especially new, but anyone in general watches a video and leaves a like on it, it really performs well. Like, it really helps out the algorithm a lot. So, but anyways, I appreciate all you guys watching, and I'll catch you in the next video. See you guys later.